morning and welcome to the first working day in the week, at least here in Nigeria, after the long public holiday. When it's 10 a.m. on a weekday, it's time for Business Morning. So let's do business. I'm Imi John Mekwa. Let's start off with oil prices. Prices were steady on Tuesday as investors weighed strong holiday travel in China that could boost fuel demand against the prospects of rising interest rates elsewhere, slowing economic growth. Brent crude futures were up 4 cents to $82.77 a barrel, while U.S. West Texas Intermediate crude gained 6 cents to $78.82 a barrel. Oil futures had risen more than 1% on Monday on optimism that holiday travel in China would increase fuel demand in the world's second biggest economy. Bookings in China for trips abroad during the upcoming May Day holiday point to a continued recovery in travel to Asian countries. Still, the numbers remain far off pre-COVID levels, with long-haul airfares soaring and not enough flights available. Investors express optimism that Chinese holiday travel would boost fuel demand in the world's largest oil importer. In addition, expectations for a slowdown in U.S. gross domestic product growth in the first quarter prompted a pullback in the U.S. dollar index yesterday, and that supported gains in oil prices. Still talking oil, but this time edible Malaysian palm oil futures fell sharply on Tuesday as the market reopened after the Eid holidays, down for a third consecutive session to hit more than a one-week low. The benchmark palm oil contract for July delivery on the Bursa Malaysia Derivatives Exchange slid 122 ringgit, that's about 3.29%, to 3,583 ringgit, that's about $807 a ton during early trade. Cargo surveyors are scheduled to release April 1st to 25th export data for Malaysia later on today. Shipments during April 1 to 20 fell 25.8% from a month earlier, independent inspection firm reported last week, while cargo surveyor Intertech Testing Services reported a 20.3% decline. Dalian's most active soy oil contract fell 0.5%, while its palm oil contract eased 0.5%. Soy oil prices on the Chicago Board of Trade were up 0.08%. Palm oil is affected by price movements in related oils as they compete for a share in the global vegetable oils market. Leaving the oils now, let's go to grains. Chicago wheat futures lost more ground on Tuesday, with prices dropping to a one-month low on pressure from lackluster global demand, although deteriorating condition of the U.S. winter crop kept a floor under the market. Corn edged lower as China canceled some purchases of its U.S. supplies, while soybeans eased. The most active wheat contract on the Chicago Board of Trade slid 0.2% to $6.55 for 3/4 of a bushel after hitting its lowest since March the 22nd at $6.54 a bushel. Corn was down 0.1% to $6.07 a bushel. Soybeans also gave up 0.1% of its gain to end at $14.35 for 1/4 of a bushel. Export prices of Russian wheat continued to decline last week as low demand outweighed the impacts of the market of uncertainty over whether the Black Sea grain deal will be extended. The U.S. Department of Agriculture on Monday rated 26% of U.S. winter wheat in good to excellent condition, the lowest for this time of the year since 1989. And that's due to prolonged drought. Private exporters reported that Chinese buyers cancelled purchases totaling 327,000 tons of corn, according to the U.S. Department of Agriculture. We come back to Nigeria now. The Ajaokuta-Kaduna-Kano gas pipeline project is now 70% completed. Providing updates of the project during an on-site visit in Ahoka community in Kogi State, the Group Chief Executive Officer of NNPCL, Malam Mele Mikiari, says so far a total of $1.1 billion has been spent on the $2.5 billion project. The over 600-kilometer AKK gas pipeline project, which was inaugurated by President Muhammadu Buhari in June 2020, has the capacity to transport 2 billion standard cubic feet of natural gas every day to 3 proposed independent power plants in Abuja, Kaduna, Kano, and other gas-based industries, as well as other identified and proposed commercial off-takers along the entire pipeline route.
Our contractor, our staff, who are doing everything possible to deliver this project. And we're most grateful to them, and we appreciate the great work that they are doing. And of course, for the benefit of the Nigerian public, this is one of the most massive projects that we run in the company. It is of immense proportion of value to our country and to the socio-economic growth of our country. We know that this is a must-deliver project. This project has not stopped for one day. We are continuing to fund it despite the fact that we do not have third-party financing on this project. We have so far spent over $1.1 billion on this project from our cash flow. We are a very different company today. We are a commercial company. We have intercompany loans within our company now. This company can fund this project. So we do not need any support on this project. We will deliver this project. As we speak now, our contractors, we don't owe $1 to our contractors today. You know, we pay all their invoices. There are over 30 sites that are active today in this project, and we are very, very hopeful and optimistic that we'll deliver this project. Yes, there are challenges, security issues. We have lost men, and we are so sorry to their families. We continue to share their grief. But despite this, you know, we have gotten massive support from our government security agencies, the Nigerian Army, the Department of State Service, and all other government securities to make sure that our workers work safely and that we're also able to continue this project uninterrupted. And we're most grateful to this team, and we assure Nigerians that this project is different. This project will be delivered.
Certainly a project many eyes are looking out for, especially at a time when subsidy is supposed to be removed and we're supposed to turn to gas, like auto gas and some other sources for other sources of power, electricity, one of it. Certainly that project will come in handy, and we do hope that the NNPCL will keep to the timeline, and then we'll see the completion of that. Now, yesterday, the president-elect, Senator Bola Ahmed Tinubu, came back to the country after about a month of rest. He's been reassuring Nigerians that he is back fit and ready to take over the running of the affairs of Nigeria. And about a month from now, he should be sworn in. And of course, a lot of questions and expectations are high up there. So even while he assures Nigerians that he will make the country better than he has met it, we've seen expectations coming from different arms of the country. And that's just the president-elect at his arrival yesterday into Nigeria after about a month away. So this morning, now we're going to see through the eyes of Oxfam, having the country director, Dr. Vincent Ahosi, join us virtually now to tell us some of the expectations and conversations going on at Oxfam about the expectations from the incoming administration that will be led by Senator Bola Ahmed Tinubu. Thank you so much for your time, Dr. Ahosi. Good morning. You might have to unmute, Dr. Ahosi, because I cannot hear you, even though we did test that earlier. So please do unmute. But I'll go ahead to ask that.
Good morning.
Okay, great.
Nice to have you.
Good to have you. Good to have you. So a lot of people have said, oh, we expect the new administration to hit the ground running, whatever that means to different people. I guess we'll find out what it means to Oxfam this morning. But we expect the swearing in to happen on the 29th of May for Oxfam. After that, 30th, 1st of June, what should happen? What should we be looking at? What should we expect?
Thank you so much, Ini. For Oxfam, I think the president-elect should actually start working now, not wait until May 29th. When I say start working now, I mean it has to start the planning and the thinking and trying to see how to figure out the problems and the issues with Nigeria. We need to put things in perspective. The Nigerian case now has become so very, very concerning. Concerning in the first instance is that more than ever before, Nigeria now needs a government that will be able to reduce poverty in action and in deed. Now we have 133 million Nigerians that are living in poverty, multidimensional poverty. 25 million Nigerians are at the risk of facing hunger between June and August this year. Nigeria has over 20 million children out of school as of today. That is more than the population of Senegal and Gambia put together. For every 10 Nigerians, 6 out of these don't have access to quality primary health care. Nigeria is saddled with debt, and the Debt Management Office has told us that the incoming government is likely to inherit as much as 97 trillion naira in debt. That's about 172 billion US dollars. Just last year in 2022, Nigeria debt service to revenue ratio was 80.6. That is beyond, far beyond the 22.5% recommended by the World Bank for low-income countries. We can go on and start talking about the problems Nigeria has. And if you can remember, in January, the central bank raised interest rate to 18% because the consumer price index, they said they needed to rein it in. But the consumer price index as of end of March is 22.04. That is a lot. And if we look at the budget we are currently implementing in Nigeria, the 2023 appropriation budget, as presented by Mr. President, we have a revenue projection of just 9.7 trillion naira. And yet, we intend to spend as much as 20.5 trillion naira, leaving a deficit of about 10.5 trillion naira. This is unprecedented. This is a figure that we have never seen in Nigeria before. That is an increase of about 46.6% over what it was in the last year. Nigeria intends to service its debt for this year with as much as 6.3 trillion naira. That rose from 3.7 trillion naira in 2022 to 6.3 trillion in 2023. So you can see that beyond the celebration, beyond the ceremonies of swearing in, I think the incoming government has its work cut out for it already. Nigeria has one of the widest wealth inequality in the world. Nigeria only contributes 2.4% of the world population. But when you look at death through pregnancy, Nigeria contributes 10% of death through pregnancy to the world. That is unprecedented. We have Nigeria contributing the second highest number of stunted children in the world at the national average of 32%. So now the government has got to pull up the sleeves. This is the time to work for Nigeria and Nigerians. This is not the time for celebration. And what Oxfam is saying is that the incoming government should look for how they are going to, one, eliminate hunger, reduce inequality, and reduce poverty. And is asking the incoming government to be a government that will be for the majority, 99% at the bottom of the pyramid.
All right.
The top 1%.
Okay,
and
Dr. Ahosi.
What are we recommending?
Yes, okay, Dr. Ahosi, just before you go to what you're recommending, I mean, you touched on a whole lot of fronts. You talked about food security, out-of-school children, issue of debt and its servicing, mortality rate, and of course the fiscal policy. But I mean, as Senator Tinubu had indicated, even before he won the election, I mean, remember the Chatham House scenario where he was asked questions and he did delegate it. So obviously he needs a cabinet, because he's not going to do this work alone. Obviously, he cannot be the one thinking of security and then health and go back to oil and gas and all of that. So we did see a delay in the appointment of cabinet members and ministers by this current administration led by President Muhammadu Buhari. How important is it that the incoming administration, when we say hit the ground running, that having a cabinet being part of that?
Thank you. I do not envy the incoming president because, like I said, he has his work cut out for him. And one of the problems we seem to be having in Nigeria is that the size of government is too large. is way too large, not only at the national level, but even at the sub-national level. You have now a government where we have 8.2 trillion naira as our projected recurrent expenditure for this year. And out of that, 4.99 trillion is going to personnel cost alone. So it has to work with less people. We need to reduce the number of people that is hired by the government. Now it has to have the wisdom to be able to hire not those who will look the president in the face and tell him what he wants to hear, but those who will have the confidence and have the will and have the capacity to look the president in the face and tell him what he needs to know, what he needs to do to pull Nigeria out of this seeming overriding poverty. That is the kind of men and women the president needs, or the incoming president needs. He needs men and women who know how to think beyond, outside the box. Not people who will come and remind you of your religion or remind you of which political party you belong to. Because poverty does not disaggregate people into Christian, Muslim, one political party or the other. We need men and women that will be able to think, men and women that will be able to work with the development partners to see how do we reduce poverty, because it is unthinkable. Nigerians are hungry, Nigerians are sick, Nigerians are tired. And these men and women should be men and women that are not motivated by wealth, or motivated by wages, or motivated by pecuniary things that they stand to benefit from government. This should be people that are willing to serve. And the development partners are out there, they are ready to help Nigeria. We just need to put on the right thinking cap. Why can't we just for once advertise these positions online, advertise them in the newspapers? Yes, the law says you have to have a minister from each state. That is what the law says. But the law did not say you cannot advertise the skills, the experience, the expertise that is needed to fill these positions. Go ahead and advertise them. Fill them in with men and women from these states. If you want a health minister from Edo State, advertise health minister from Edo State and get the best that will be able to reduce maternal mortality. And you give him or her the targets with a monitoring matrix that by time B, we want to reduce infant mortality from A to B. And you are out there monitoring him or her and provide the enabling environment, provide what he or she needs to do it. That is the kind of cabinet that Mr. Sheikh Tinubu needs. So this is not the time, this is not going to be business as usual, because if we continue as business as usual, we will continue to go around the circle. The people will continue to be worse off for it, and the country will not move. So what are we saying? We need to reduce wastages. We need to increase revenue. We need to fight corruption. We need to provide the enabling environment for small and medium enterprises to thrive. The government is not the highest employer of labor. The figures are out there. The highest employer of labor today in Nigeria is the small and medium enterprises. They hire as much as, they provide employment for as much as 93% or thereabouts. I mean, they provide about 96% businesses, and they hire as much as 84% of Nigerians. Not even the big corporations, not even government. So why should government be spending 4.99 trillion naira to pay civil servants? That is not the right way to go. That is not the right trajectory. It doesn't look too good. The fiscal condition doesn't look too good for Nigeria. We need men and women that will be able to do things and do it differently. That is what the incoming government should be looking at. And of course, if we have to narrow it down to details of things, one, we need to de-incentivize political appointments. Gone are the days where that should be that Nigerians, why are so many Nigerians willing to go to government to go and get rich, to go and get money that they are not even qualified for? That is not right. That means something is wrong somewhere. We have to stop borrowing to finance our current expenditure. We have to stop consuming what we don't have. We have to reduce our dependency on imported goods and services. And of course, we have to progressively and purposely, we have to fight corruption. This is what Oxfam is asking the government to do.
Yeah.
In terms of generating more funds, we need to provide the enabling environment, like I said, for the small and medium enterprises to thrive. We have to support the manufacturing industries. We have to support that sector. And of course, when it comes to agriculture, If just last year, 2022, Nigeria only released 1.8% of its total budget to agriculture. You can't expect a miracle from that. If the government can at least release them, budgeting is one thing, release is another thing. If the government can budget and release as much as 10% of its budget annually to agriculture, then we are on the way to it.
All right, Dr. Hansi. I mean, knowing all of these things, I don't think they're new. Oh, we have to provide food and we have to make the environment conducive for businesses to thrive, support manufacturers. I don't think any of them is new, and I don't think anybody would say anything differently. But I guess what would be different, which we would like to hear from Oxfam, is what new strategy? For instance, if we want to talk about food security, we all know that if there's insecurity, then farmers will not go to the farm. But if the farmer is assured of security and is given tractors and other equipment, he has fertilizer, then he will certainly go to the farm, and he has the infrastructure, you know, to get the goods out of the farm to where the market is, then we would have dealt with food security. So what can we do differently? What can this incoming administration do differently to ensure that these things, I mean, talking of a conducive environment for ease of doing business, what can we do differently? What should he be looking at doing differently?
I think one thing we could do differently is for us to have the political will. What we have seen in time past is there's a lot of talk. There's a lot of grandstanding, pardon my English, and there's a lot of talk on in the open place, in the public domain. But we have not seen this matched with political will. We have said that we all know that insecurity is a big problem in Nigeria. So we have to have the political will to call a spade a spade. It is not just appropriating funds to fight insecurity, is to make sure that Nigerians are held accountable. How many people have been arrested for doing what they are not supposed to be doing? We have to ensure the rule of law. Everything starts from the rule of law. We appropriate this money. How are they spent? That is another thing. People are corrupt. Some people say Nigeria is fantastically corrupt. There's nothing like Nigerian factor. The Nigerian factor simply means that we are building individuals and not institutions. It is high time we start building institutions that will last longer than any one of us. If you are found to have done something wrong, there should be accountability. Impunity should not be the case. No man or no woman should be above the law. It's as simple as that. And the moment we are able to set the law as the ultimate one that everyone will have to uphold and respect, every other thing falls in place. Of course, the political will to be able to appropriate what you need to appropriate. We do not want a situation whereby we continue to dance this through to the same tune and expect things to change. That cannot be. We know the solutions, but we now need the political will. You're talking about agriculture. We are not talking about fossil fuel here. We're talking about climate smart agriculture. That is the new thing. We are talking of healthcare. In healthcare, we are talking about universal, basic, and qualitative healthcare. We are talking about education. We are talking about mandatory, compulsory, qualitative, primary and secondary education. That is what we're talking about. It's different. So these things are different. The development partners are available. Oxfam is willing to do all this to help, but the government has to be willing, has the political will to step down from the high horse and listen to the experts, not listen to the praise singers, not listen to the sycophants, not listen to the Nigerian politicians. That is the difference. I tell you one thing. There was the richest man in Africa was commenting. Aliko Dangote was commenting about a week ago about a particular government in Northwest, where the governor seems to have done better. They were reviewing the case of Northwest, economy, fiscal space, human development, and everything. And I remember that this same state government was the same state governor. The governor got elected. Even as a governor-elect, he had not been sworn in. And I was at the then DFID office, and I saw him turn up because he wanted the experts. these development partners are available. They are not, they want to help you. They want to show you how to do it. You only need to make your government open and transparent, right, and accountable, and they will be there to help you. They can embed people within your government that will help you. So it is not going to be business as usual. If this government wants to do the right thing, think of men and women that know how to do it. And you must be able to hold your appointees accountable. It's one thing to appoint people, it's another thing to leave them to do whatever they want. You have to have the vigor to develop monitoring metrics for them, develop targets from them, and monitor them. And let there be peer learning and peer review. And when people are wrong, let them be held. There should be, we have to develop learning system. We have to develop accountability system. That is the difference. That is what is lacking in Nigeria, and that is what Oxfam is calling on.
All right. Thank you so much, Country Director of Oxfam, Dr. Vincent Ahonsi, for sharing your thoughts with us this morning. We do hope, if not the president-elect, then somebody who is close to him is listening and will share this message with him. Thank you for your time. Enjoy the rest of your day.
Thank you for having me.
You're welcome back to watching Business Morning here on Channels Television. We did tell you earlier that oil prices were steady as investors weighed strong holiday travel in China that could boost fuel demand against the prospect of rising interest rates elsewhere and slowing economic growth. Brent crude went up this morning, while U.S. West Texas Intermediate crude also gained 6 cents. Well, to talk more about some of the drivers of global oil prices and other commodities in that space is Adesola Sumoni. Joins us now from Reading in the UK, senior analyst, financial derivatives company. Hi, Dr. Adesola. Good morning.
Good morning, Ini. Thank you for having me on the show this morning.
Yeah, so once again, of course, we see China is a giant in the global oil space. Its demand, its supply, no, more of its demand affects the market. And we see travels in China driving oil prices again steady, and then I think it's going to be up after this morning.
Yes, indeed. Thank you for that question, Ini. So like you mentioned, China is indeed the largest importer of crude oil globally. And as a result of that, actions like economic activity in China does have big effects on global commodities prices, particularly the price of oil. So as you mentioned now, the upcoming May Day holiday is increasing the demand for international travel in China. A lot of people are moving to spend the holidays abroad, and that's analysts are expecting that would boost oil demand, which will support prices. However, it is important to note that transportation as a share of China's oil consumption is only 54%. You can compare that to around 72% in the United States and around 68% in Europe. So while there's big demand for travel, the effect may not be as big as expected, and the effect on oil prices may not be so significant. Yeah. Now, other factors affecting oil prices are also, like you said, there's renewed concerns about economic growth, particularly because commodities like oil and copper are sensitive to growth. Earlier in this month, the IMF revised downward growth forecasts for the global economy down to, I think, 2.8% from 3.4%. Last year. In addition to that, we are seeing, for example, three top central banks, the U.S. Federal Reserve, the Bank of England, and the European Central Bank are slated to have their monetary policy committee meeting next week, and all of them are expected to increase benchmark interest rates by at least 25 basis points. All of these factors, renews concerns about a slowdown in global economy, which is expected to also slow down oil demand as well as and weigh on oil prices.
So we
now,
also...
on the supply side, okay.
No, go ahead, Adesola.
So on the supply side, we are seeing OPEC-led production cuts. Around 1.6 million barrels of production cuts is expected to hit the market in May, which is also supporting prices. However, in respect to that, we are seeing some factors coming out of Russia. Essentially, there are talks that Russia is not being transparent about its own production cuts. While the government has said that they are cutting production, and exports out of Russia. We are seeing strong exports going out of Russia, particularly going to countries who do not have this price cap in place and are selling at a discount. For example, we are seeing strong exports from Russia going to China and India. So going forward, we expect that in May, when this OPEC plus production cuts hits the market, we expect that the market will be a little bit undersupplied and prices would be a little bit elevated.
Yeah, just like, because talking about Russia, we did hear first 500,000 barrels a day, and then we went to 200,000. So we don't really know which one they are sticking to. And May is just a couple of days away. When we add that to what the other countries, Saudi Arabia and all of that, are cutting, then the squeeze is really on supply for global oil. I hope that will bring good news to Nigeria, though.
Hopefully, I mean, and this was happening. A lot of investors right now are just, especially oil traders, are just maintaining tentative positions. I forgot to add that, we're also seeing refining profits, or the profit margin for oil refiners also squeeze, which, points to challenges with demand. But with Russia, like you said, there's no transparency. We don't exactly know what is going on. And with arrests of journalists in Russia, of international journalists in Russia, it's a bit of a tricky situation. So with that, we don't know whether the government is going to cut, how much they're going to cut, whether they're going to stick with their commitment and all of that. But I think by next month, when the official numbers are out from OPEC, we'll see whether the cut is having the desired effect. But overall, I think that the cut by Saudi Arabia alone is sufficient to shift oil prices upward.
And we hope that will increase our revenue here in Nigeria. All right, so let's look at other commodities now. Let's look at what's going on with the price of gari, rice, palm oil, the staples that Nigerians turn to.
Okay, good question, Ini. If you look at most commodity prices have been flat month on month. Like you mentioned, the price of gari has been flat. 50 kg bag of gari has been flat at 20,000 naira. Price of flour has been flat at 29,000 naira. Cement has been flat as well. But if you look at commodities like tomatoes and pepper, you see the prices are trending upwards. For example, the price of tomato is up 31% to 25,000 naira, and that is mainly because of this scourge of Tuta absoluta, which is a pest that destroys tomato crop in Kano, and because of that, we are seeing a squeeze in supply coming out of Kano. But more importantly, I think one important factor to discuss is the price of diesel. Right, so we noticed that the price of diesel has actually declined to around 640, to an average of 640 naira per liter from around 800 it was earlier this year. And I think that has important implications, particularly for domestic commodities prices. First, it has implications on transport and logistic costs. Right? We think that this is going to drive down the price of, it's going to reduce the cost of transporting these commodities from the north and the middle belt down to the south, which is positive. Also, it is going to reduce the cost of bread production. The cost of bread, at least, the cost of bread. Now, whether that reduction in cost will be transferred to the final consumer is something else. And also, we've seen the exchange rate appreciate to around 738 naira to the dollar at the parallel market. So all of these factors put together, I think it points to the fact that we may see inflation moderate going forward. Maybe not inflation for April, maybe in May, but we'll begin to see inflation moderate. And this also has implications for the Monetary Policy Committee. If inflation moderates consistently, then we might begin to see a change in the direction of monetary policy.
All right, Isla, do we know what's driving down the price of diesel?
I think that also tracks, developments in the global oil market, right? We've seen last week, this month in particular, oil prices have been quite volatile. When, like I mentioned, when Saudi Arabia announced the surprise cuts in oil production, we saw oil prices really spike. But over the weeks, we saw oil prices almost give up some of the gains they made following the announcement. So I think it is tracking the developments in
in the global space. All right.
Yeah.
All right. Thank you so much, Dr. Adesola Sumoni, senior analyst for Financial Derivatives Company, for your time this morning.
Thank you.
Welcome back. Still watching Business Morning here on Channels Television. We head to another market outside the commodities market now, and Will Ibong has the details of the money markets in Nigeria.
Oh, good morning, Ini.
Good morning.
So we still bouncing off from last week's performance, what happened in the equities market.
Yeah, because the market was closed yesterday.
Yes, we did deal with the fixed income space yesterday, and we're looking at what happened last week in the equities market. It's been a long holiday, Friday, Monday. People are relaxing, and money is,
I just hope investors will not come profit-taking by
after
today.
the spending, But I think they're going to be looking and watching the trend, especially with numbers that have come in, inflation numbers coming higher than expected, and looking at what the CBN, probably projecting what the CBN is going to do, the MPC, and they're, I think that's going to, determine the decisions they make in terms of what they buy, where they buy, or what they sell, and so I think that's going to play a huge role in that. But we're looking at, let's just assess how the equities market, played out last week. We saw another subdued performance. The week closed, marginally, though we had 3 out of 4 trading days that were marginally higher, we still saw, a red close for the equities market. And this was due to sell pressures on MTN Nigeria. And though we saw some bargain hunting in Access Core and Transcore. Now, strong buying interest was seen in Transcore. This was supported by reactions to the announcement that, Femi Otedola, that's the billionaire Geregu CEO, was acquiring a significant stake, that's about 5.52% in the company by Nigeria, in Transcore. Now, if we can have the equities market there to see what the close was down 1.08%. Can we have the equities market close, please? And now, analyzing by sectors, the activity levels, we saw the trading volume and value was improved last week by 41.2% and 45.6% week on week, and this also because of Transcore, which accounted for about 30.7% and 16.2% of total trading volume and value. Now, looking at sectoral performance, we saw that it was largely bearish. We saw declines in the banking, oil and gas was down. We saw industrial goods was also down, and consumer goods and insurance were the only gainers last week. Transnational Corporation was the outlier. It topped the gainers chart for the week. It followed, Ikeja Hotel followed. We also saw Zenith Bank trading, leading the losers last week with a 12.2% loss week on week. But we're going to speak into Onose Asote Naolo. He is an investment analyst with Main Street Capital, to give us more insights as to what was driving sentiments last week. I think we don't have Onose at the moment, but we're going to just skip on to the market and just see what's going on there. Now, if we look at the NASD market, we saw that it was no different from the equities market. It closed down 0.11% last week, and if you can have that quickly, it closed 0.11% last week, and we also saw it closing the NSI was still at 738.77 points. Market cap is still at 1.02 billion naira. It's still, back to that level now, that mark that we're known for, that we know it to be, and it's still remaining there. We saw activities last week was largely subdued. We saw volume was down almost 1%. Value was, down, to close at 84.06 million naira. On all transacted in 57 deals. Now, if we look at Geofields, the advancers for last week, we saw Geofields up 9.81%. to close at 2 naira 35 kobo from its opening of 2 naira 14 kobo. We also saw Afriland Properties up 4.63% to close at 2 naira 26 kobo from 2 naira 16 kobo. It's opened the week with, and Niger Delta Exploration and Production Company was up 0.27% to close at 210 naira 56 kobo from its opening of 210 naira. If you look at the decliners, the Central Securities Clearing System was the only decliner last week. It was down 3.06% to close at 14 naira 25 kobo from its open of 14 naira 70 kobo. Top trades, let's take a look at that now. We see industrial and general insurance, that's IGI, topping the trades for last week. Geofluids followed closely, and Afilan Properties not far behind. Now we're going to go to Nose Asote Naolo now, investment analyst, Main Street Capital. Tell us what happened in the equities markets. Good morning, Nose. It's good to have you on the program.
Morning, Will. Thanks for having me.
Now, last week was no different from what we saw the previous week. Bearish, very, very red. How long will this go on for?
This might go on for a while because of a couple of factors. The first one is the main reason why we saw an increase in the markets or an increase in prices, from December till basically around this period is because of dividends. Now, as companies begin to declare, their dividends and dividend qualification dates come and go, people begin to pull their monies out of the equities markets. That's the first thing. The second thing now is with the fixed income space, right? We know that the government is trying to raise a lot of money to fund, their budget deficits, and they are really looking towards the local market this time because, with the international market, there's a lot of issues. We have a lot of, foreign debt on our hands. I think even last week or 2 weeks ago, the IMF said that about 96% of our revenue last year was used to pay foreign debts. So the government is looking into the local markets, and to encourage them, the government may now have to raise, the rates, the yield that they're willing to give investors to encourage them. And then on another hand of that is we see the MPR, the monetary policy rate, is increasing. It was literally raised to 18%. And during the press release, the CBN governor said that he intends to keep increasing it. Albeit gently, but he will still keep increasing it, until inflation is under control. If you look at the past inflation figures, inflation is not under control. So we expect, to see, increases in the monetary policy rate, which will also, lead to increases in fixed income, especially fixed income at the short end, of the yield curve. And the more we see, increases in fixed income, investors will rather just go to those fixed incomes that are, quite secured, quite guaranteed, than the stock market. And that's what we're seeing play out.
So how do you think the market is going to close today? It's the first trading day of the week after the holidays. What do you think the market is going to close with? It's going to be a bull or the bear?
I think the market is going to close with a bull because we see certain stocks, certain heavyweight stocks like Zenith. Now, if you notice, over the past 4 or 5 years, after the dividend qualification date for Zenith, when it gaps down, there's usually like should I say a rally? Yes, a rally between like 9 to about 13, 14%, most times. So right now, some particular stocks have, fallen to certain levels where they are now quite attractive again, like Zenith, like UBA. And then we have stocks like Access Bank and even Mansard that declare dividends, really attractive dividends, especially in the case of Access. And we saw that, in the last trading session, Access surged about 10%. So we might see some more, interested buys in stocks like that. So I believe at least for this first trading day of the week, I expect today to close bullish.
Thanks so much, Anose Asotie Naolo, investment analyst, Main Street Capital, for sharing your insights with us on the program. So, that's how we're expecting the market. I just wanted to get that in to know what the market will close out today. We're really looking forward to that. I'm expecting a green close, just as Anose said. Fingers crossed.
Fingers crossed. All right, thank you, Will. So let's head straight to London now, where Juliana is standing by. Juliana, good morning. So I hear about 8 million Britons should be smiling by now after receiving that £301 installment that starts from today till 17. But I'm just wondering how far this will go in the midst of all the cost of living and all.
Good morning, Innie. I'm smiling, but I'm not smiling because I got £301 from the Department of Work and Pensions today. Although, as you said, quite rightly, millions of households will be receiving the first instalment of a cost of living payment. This is going to be about £900. So those who are eligible from today for the next 2 weeks, they'll receive £301. And then I believe a second instalment is going to be paid in the autumn and a third next year. And this is all part of the government's government's plans of reducing debt and encouraging growth. And they need to do that by supporting the most vulnerable households, because currently food inflation is at a 45-year high. And we know that the cost of living crisis is really causing lots of strain for vulnerable households. This is an extension of what was received last year. So according to government estimates, each and every household received about £2,500, not just in cash, but of course we know that there was energy rebates, so lots of energy companies were capping how much customers were having to pay for their energy bills. So this is an extension of that. So if any of our viewers are listening and you do fall under a vulnerable category, so if you are disabled, if you are elderly, if you are not working at the moment, you should check with your local job centre, because lots of people will not know that they're eligible for these benefits. A lot of this cash instalments that people are going to be getting, there are no tests and there was no form that you had to fill in. You would just receive it in your account. So £301 for some, not enough, but for those who are really struggling at the moment, this is a significant amount of money that will help them at least buy their groceries this week.
Yeah, talking about groceries, online grocer Ocado is going to lay off about 2,300 employees.
Yeah, that's a significant developing story this morning. Ocado, which is an online grocer, they kind of online but with smart technology. Their oldest warehouse in Hatfield, Hertfordshire, is being closed. They've just announced that this morning. The Hertfordshire warehouse was in partnership with Marks and Spencer. I believe at that particular warehouse, over a fifth of online orders were sent out from that store. It employs about 2,500 people, and Ocado have announced this morning that they are in direct consultation with them. So not great news if you're waking up hearing that story, but perhaps your job will be saved, because we know that particularly with the online boom and warehouse infrastructure, they do need staff. The labour market is really tight, so fingers crossed they won't be losing their jobs. But one of the reasons why Ocado say they're doing it is because the technology is too old. They've had that site for over 10 years. Lots of their newer, smaller sites are able to get out more orders per hour than what's currently being taken place in Hatfield. So yes, not great. Another potential huge job loss in the UK. But again, they are in consultation. So hopefully they'll be able to be recruited in another site elsewhere.
Yeah, hopefully, Juliana. Thank you for that. I hope we will have you at 1:30 for Business and Corporate.
You will.
Okay.
Thank you.
All right, now, so let's move to the crypto market now, where they seem to be losing their steam, I think. But Nadi will have to confirm that.
Steam is being lost.
Okay, it's being lost, or it's been lost?
It's being lost.
Okay.
But you know how this market can switch on
wake
you.
up.
Exactly.
Can wake up to another side of the bed tomorrow.
When you least expect. So we saw a lot of sell pressure at that 30K level, but now everyone's looking at 27K. Is that going to hold, or is 25K next? So that's how the market is looking. Look at the sentiment for the crypto market today. We know right now it's around neutral, 53 points, as we're seeing for the Fear Greed Index there. Losing that greed that I've been used to for a while now. So now we might be heading to fear if this does not hold. Let's look at the price of major cryptocurrencies we track. Now we see Bitcoin there. After losing that 30K level, 27,407, did get as low as 26,009 last time, 1.01% down this morning. Ethereum, that's down 1.61%, 1,829. Not as far as that 2,000 level it did get to. BNB holding on $330, and we see XRP losing that 50-cent mark this morning. Let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon. Great to have you.
Good morning, Ladi.
Good morning, Solomon. So, yeah, this crypto market definitely known for rug pulls. And I've not heard about any rug pull recently, but it seems there's one major one. I think they left off with about $1 million. Tell us about that.
Yeah, so basically it's Ordinal Finance, and the project yesterday just bailed out with over $1 million, and they deleted all their social media handles, and it left investors actually pretty hot because we had so many persons that were holding the tokens. And today, if you look up the token on CoinMarketCap or CoinGecko, you'll notice it has dumped by over 98%. So actually, there's no market to actually trade that token right now. So it's worthless at this point. It's totally worthless.
And definitely, they've made out with all of that money. Any way of tracking the developer, or most of the investors, are they going to get some of those funds back?
Definitely no way to get those funds back because the funds were moved to an EOA address, and right now it's just out there out in the open, and there's no way to actually find a way to connect the dots because these guys know how to hide these funds, and they will definitely not move those funds to a centralized exchange, which is the best bet they have if they want to find out who the corporates really are.
And definitely, there's so many projects right now in the crypto market, over 8,000 and more still trying to get in. At this time, you see recently added tokens on CoinMarketCap. So how do you avoid rug pulls?
Basically, there's no perfect way to avoid rug pulls because you're always at the mercy of the developers of this project and the team managing this project. The best way is just to actually stick with projects that have a track record, that have been here for years, and the founders are actually well known. That's like the best way to avoid rug pulls, and stay away from anonymous projects that no one knows about the developers or the founders. That's like the easiest bet.
Yeah, so much to navigate in that crypto market. Thank you so much, Solomon Amunde, financial market analyst. Thank you.
Thank you.
All right, so look at the top gainers now. We see Floki, that's one of the meme coins there, topping that count at 34.19% after it got listed on Binance US. So we see investors happy about that exchange listing, taking the price up 34.19%. So the market is still looking for, even though some analysts believe this market is still quite bullish, at this point, seems to be looking for direction.
Well, I guess it's just one part of the cycle. Every market has the same cycle. Exactly.
Up and down.
None stays up forever, none stays down forever.
Exactly.
Thank you so much, Laddie.
All right.
And we'll say thank you so much for being a part of this Tuesday episode of Business Morning. I hope it was worth your time. We promise to make it even better tomorrow. But do remember, 1:30, Will Ibong will be here to give you updates from the world of business. Please join her then, and I'll see you tomorrow. Enjoy the rest of your day.